Welcome everybody to today's financial literacy call. Thank you everyone for hopping on so far. Honestly, I don't know how this call hasn't been completely packed out yet. This has been a big call in the making. Took us a little while to get this going, but it will be a very, very important, very informative call that honestly you 30 that are on so far are in for a treat and will definitely gain a lot of value and leave here knowing so much more about what you should be doing with your life, where you want to be heading, a bunch of different ideas and stuff that honestly a lot of people our age wouldn't be informed about. So this is really, really huge. So just to kick it off, let's see some interaction. Where is everybody tuning in from today? Let's see it in the chat. We have a couple Torontos dropped right off the bat. Brampton. What else do we got? We have Whitby. Okay, Montreal, Scarborough, Nigeria, nice. Barrie, BC. I just came back from BC. That was an amazing trip. It's so beautiful out there. Scarborough. Myself, I'm tuning in from Scarborough as well. All right, so just to give a little intro, today we have yet another very special guest and another expert in their field. And here today, you have the opportunity to learn about the importance and the ins and outs of life insurance. So we will have a question and answer period at the end. However, I know that during these calls, a lot of times something happens, someone says something and you have a question right on the spot. So if that's the case, feel free to just send in the chat as it is, whenever it comes to you. And I'll be taking note of all the questions. So at the end, with the time that we've allocated, I'll be able to then ask our special guest these questions and she'll be able to have them answered for you. So feel free to type anything in the chat. Don't worry, it might not be answered right away, but we will get to them. So without further ado, please show love and appreciation by dropping some numbers in the chat. I want to see this chat blown up right now. for our special guest of the day, Deborah Fernando. So there you go. You can unmute yourself and take it away. Perfect.
Hey everyone, how's it going? I'm so excited to be here with every one of you guys here today. I'm very excited, very grateful to be a part of this call. Drop some numbers if you guys are excited to learn something new. If you're having a great day so far, blow up the chat. I really wanted to say that because I know you guys do it here. So anyways, so I'm here today to give you guys a little brief introduction to life insurance. And I just wanted to give a special shout out to Maria, to my brother, RJ, the chairman, and most especially Philip for putting this call together. If it wasn't for them, this wouldn't be happening. So and I know a lot of you guys, especially at this age, don't really know much about life insurance, and that's why I'm here. I want to drop some knowledge, drop some gems for you guys, just to give you a little brief introduction to what it is. So let me just share my screen with you guys. Awesome. Can you drop a number if you guys see my screen right now? Okay. Awesome. So everyone, welcome. This is an introduction to life insurance. Before we get started, I just wanted to give you a little background on who I am, right? Just so you know who you're talking to, and so we can become best friends by the end of this call. So my name is Deborah Fernando. I am a life insurance advisor. I went to Ryerson University for business management, and I graduated with a major in hospitality and tourism, and I minored in human resources as well. So I've been all around in the hospitality and tourism industry, human resource industry, and the healthcare industry as well. So I've been a licensed life insurance since about January 2016, and I've been licensed to sell products such as life insurance, disability, health and dental, travel, RSPs, RESPs, mutual and segregated funds, etc. And these companies that you see right here are just companies that I'm affiliated with my insurance contracts. Other than that, my passions are modeling, travel, community involvement, and long walks on the beach. So without further ado, let's get into it. So how many of you guys know about life insurance or know anyone that has life insurance? Perhaps your family, your friends. Let me see the chat. Okay, so we got a few people. We have your parents. Awesome, you've heard of it. Cool. Okay, I know, especially at this age, not a lot of you guys know about it. What do you know of? Like, for the people that did say that they've heard of it, what do you know about it? Okay, the family gets the money when you die. That's correct. Your life is insured. Yep. And it secures your family if anything happens to you. That is correct. Those are all correct answers, but we'll definitely get into that within this presentation. So these are just terms to know for you guys while going through the presentation. So beneficiary is one, so the individual who receives proceeds from a life insurance policy at the death of the insured. So anyone can be named as a beneficiary. Anyone who is over 18 can get the access easily to it. However, if your beneficiary is under 18, then you'll have a guardian who'll be responsible to distributing those proceeds to them. So when you die, it's the person who's going to get those proceeds. So the death benefit is the amount of money paid to the beneficiary when the policy holder dies. So that's the money that they'll get, the beneficiary will be getting when the insured dies. And the insured person is the person who the life insurance contract is underwritten on, and the only person whose death triggers the claim to pay out the benefit. A premium is the payment required by the life insurance company in order for the insured's policy to remain in effect. Depending on the terms agreed upon, the premium might be paid at once or in a series of regular payments. So that's going to be the monthly payment that you're going to be paying in order to keep your insurance policy intact. And lastly, risk classification. That's the step in the life insurance underwriting process in which a company assesses and classifies an applicant's risk of mortality. So risk, what is it? I know a lot of you guys here in Trade House definitely know what financial risk is. Risk is the possibility of a financial loss. And why is risk important to insurance? So risk is what makes you decide whether or not you need life insurance. And risk is also what insurance companies measure when determining whether to offer you insurance and how much it will cost. So unfortunately, not everyone is eligible for life insurance. And there are a lot of risk factors that they do get into, which we will talk about later on in this PowerPoint. So what is life insurance? Life insurance is an agreement between you and a life insurance company where if you die, they will pay a death benefit, a lump sum of tax-free money to someone that you choose. In exchange, you are to periodically pay them an insurance premium, which is a small amount of money over time. And let me just show you guys a quick video to kind of briefly explain what that is. I know we love visuals.
Want to live a long and happy life? Easy. Just avoid these dangerous situations. Throw out your bed. Falling out of bed kills 450 people annually. Of course, always watch what you eat, and eat from. Never use a vending machine, or even stand close to one. They kill 13 people a year. And ants? They cause 30 deaths per year, so if you see ants, run. But not too fast. 6 runners die per year during races. So stay indoors, but try not to move. 18,000 deaths occur from accidental injuries in the home. Baths alone kill 340 people. Oh, and not to mention heart disease, respiratory illnesses, stroke, cancer, and unintentional injuries. If you're able to avoid all this, you will greatly increase your chances of living a long and happy life. The truth is, the only way to protect yourself is to make sure you can provide for your loved ones no matter what happens, even if you're one of the 130 people killed by deer. Life insurance is the safety net that protects your family financially if you can't be there to support them. A life insurance policy provides a lump sum of money that is paid to your beneficiaries upon your death. The money can be used for lost income, funeral expenses, bills, funding a child's college education, and more. Whatever you need, there's a policy right for you. Term life insurance is coverage intended for a specific period of time, typically from 5 to 30 years. Whole life or permanent life insurance covers you for life and includes a savings component that helps grow tax-deferred income that, after time, can be used as a loan, to pay premiums, or as added death benefits for your beneficiaries. Term and whole life insurance policies require a medical exam, but there are also no medical exam life insurance policies that can be secured in as quickly as 24 hours. Interested in learning more about life insurance and why you should have it? Visit our Learning Center or FAQ page. If you're ready to get started or have questions for our life insurance representatives, fill out the form below for a...
Okay, so that was just a quick video to kind of briefly explain what life insurance is, guys. So none of us like to think about things going wrong, especially not the prospect of dying one day. Yet thinking about it, you can plan ahead to make sure that your loved ones are provided for in the event that anything should ever happen to you. So you buy home insurance, homeowner's insurance to protect your house, and car insurance to protect your car. But what about insurance to protect your family's financial security? So I just wanted to go over the 2 different types of life insurance. So we do have term insurance and permanent insurance. So this is just a little comparison between the two when determining what you want to get and what your family should get. So term insurance is usually covers your life temporarily. So that's usually for 10, 20, or 30 years. So it's usually, I would say that this is usually meant for those who are older, or if you're just covering financial needs that will not last forever, like it says in the second point. So for example, if you took out a mortgage and you're planning to pay it off within the next 20 to 30 years, and I would say a lot of people would get term insurance to kind of cover that in the case that they die, and they still would need to pay out the rest of the, the mortgage loan. And term insurance is simple and inexpensive, good for those on a tight budget. And for term insurance, though, however, premiums can increase periodically when the term expires. Who's drawing on my thing? But Permanent insurance, so this one is a lifelong protection. There are investment options with permanent insurance, and it accumulates cash value on a tax-deferred basis, which you can tap into to take out a loan, supplement your retirement income, and cover an emergency expense, and more. The premiums are generally higher with the permanent insurance just because of the additional options, but the premiums do stay leveled. Whereas in term insurance, let's say you get a term insurance that it's only good for 20, 30 years, right? So it may be the cheaper option now. However, when it expires in 20 or 30 years and you're still living, you'd have to kind of get reassessed for life insurance, and it'll be more expensive when you're older. Whereas permanent insurance, you're covered for the rest of your life and you don't even have to worry about requalifying any of that stuff, right? So types of permanent life insurance. So there are a few types of permanent life insurance. There's actually more than this in this chart right here. However, I'm just going to briefly go through the different types of permanent life insurance. So there are several types of permanent life insurance policies. The primary differences between these policies have to do with how premiums are paid and how the cash value grows over time. So the premiums, as mentioned, was going to be the payment that you make for the policy, whether that be at once or monthly. So there's the differences in that for the different permanent life policies, and also cash value growth. So cash value life insurance is a type of permanent life insurance that includes an investment feature. So what cash value is, it's the portion of your policy that earns interest and may be available for you to withdraw or borrow against in case of an emergency. So with whole life insurance, your premiums will be level for the length of the policy, so it will not change. It's going to stay the same. And the cash value grows at a guaranteed rate. For universal life insurance, the premiums are a maximum and minimum premiums are set, but you can pay any amount between these. So let's say you want to pay the minimum right now, but then somewhere down along the road, you get a better job and you want to pay the maximum. You can definitely change the amount of premiums that you're paying. So it kind of like helps you with the balance at the end. And you can also pay premiums by using the policy's cash value. So the cash value grows based upon performance of the market, though there's a guaranteed minimum annual return. And with variable life insurance, the premiums can be level or vary depending on the policy. And for the cash value growth, you choose how to invest the cash value from a set of options which are similar to the universal life insurance. Life insurance as a financial tool. So there are many financial benefits to getting an insurance policy. One is the tax benefits, which most insurance policy proceeds are tax-free. So what that means that the life insurance policies you receive as a beneficiary due to death of the insured person aren't includable in your gross income, and you don't have to report them. Also, estate taxes may need to be paid depending on earnings. So what that means is the cash value accumulated in a permanent life insurance policy will help you cover the estate tax bill if you have more than enough assets. And for business users, the advantages for it would be that life insurance can protect your businesses. Insurance on you and your key people can help prevent the unexpected from financially harming or even destroying the business that you worked so hard to build. You can use the life insurance funds to pay debts and expenses to help keep the business going, find and train a suitable replacement, assure creditors and suppliers that funds are available to meet commitments, and reassure customers that your business has the means to continue. Life insurance helps with the loss of an important figure in a business. So in life insurance, we do have a key person insurance. So what that means is these are policies that are usually owned by a business, and they insure the key employee who is responsible for majority of the profits or has a unique and hard to replace skill set that is vital to the organization. So the employer does this to offset costs such as hiring temporary help or recruiting a successor, and losses such as a decreased ability to transact business until successors are trained, which the employee is likely to suffer in the event of the loss of a key employee. So for example, I had a friend who passed away. He was a tattoo artist and he had his own small business, right? So it was him and another guy in his business, but he was bringing in majority of the profits in his company. However, when he passed away, he couldn't, they couldn't even afford a funeral for himself, yet alone keeping the business growing, right? So they had to shut down the business. Everything that they had, the legacy they were trying to build, was gone because they didn't have anything to secure them financially. So why is individual life insurance worth it? So life insurance ensures your family's financial security, and it helps you deal with loss. So like I said, you're already dealing with so much with losing a loved one, all that emotional loss, that mental stress. And the fact, the fact is, dying isn't free. A funeral itself costs about $10,000, and that's a lot of money to die. And a lot of people are starting GoFundMe pages, and just to make up money for just a funeral. So at least having that kind of helps them with deal with the loss, and it replaces the income and gives them a peace of mind as well. So it covers their final expenses such as funeral costs, medical bills not covered by health insurance, estate settlement costs, or other unpaid debts, and it bypasses probate fees. So what probate fees are, they're properly known as estate administration tax in Ontario, and they must be paid to the government of Ontario when an estate is probated. So in Ontario, probate fees are $5 for every $1,000 of assets up to $50,000, and $15 on every $1,000 of assets over $50,000. With life insurance, if you have named beneficiaries to your life insurance policy, such as a family member or any other person, you don't need to worry about your life insurance proceeds getting stuck in probate. So take comfort in the fact that your life insurance proceeds will go directly to your named beneficiary upon your death. So for instance, if you have named your daughter as a person to receive your death benefit after you die, then the named beneficiary is your daughter. She's the rightful recipient of your life insurance proceeds, and the proceeds will belong to your daughter as her property, and she'll be able to use the money any way she sees fit. So I just wanted to show you guys a quick little video to why, a life insurance is worth it, and what regular families go through every day when they don't acquire life insurance and someone they love has passed away.
My dad was a comedic genius. He loved to make everyone laugh. He loved to be the star of the show. But he also had like a softer side, so he would write my mom love notes and little handwritten letters and poems, and there was always something that she came home to on the table that was just handmade, and he was really loving and very affectionate.
He was a recruiter for a telecom company. He loved music. He was actually a rapper in a group at one point when he was younger, and even got signed. So yeah, he was pretty amazing person.
He was on a boat with his friends, and they were out, and his hat flew off in the wind, and it was a hat that was, I guess it had some memories with him. It was his father's, so he jumped in after it.
There was a knock at the door, and it was two officers dressed in black, and they said, "I'm sorry, ma'am, but your husband is missing. The currents had pulled him under."
I just remember hugging her from behind. I'm like, "It's okay, Mom. It's okay. It's not okay."
It took them 48 hours to find him. He was 33.
And it was just sad. It's just like there's this big, lovable energy in the house, and then like it's just wiped out.
Immediately, I was an emotional wreck. And I, was now a single mom. So it was hard for me to be able to stay home and grieve because I had to work. It was just literally just day by day, like, what am I going to feed the kids? I have to give them dinner. We had no savings. I mean, we'd been married 5 years, and we talked about all of this. We talked about estate planning stuff. We talked about life insurance. It was definitely something that we wanted to do. We just thought that we had more time. When you're dealing with an emotional loss like that, having to deal with financial loss and financial hardship is even more difficult. So, I would say that life insurance is a must, not a luxury, but a must.
My mom has raised me She's raised me into something that I'm proud to be. Nothing's gonna stop me. I want to be a doctor. That's my dream. That's my goal. And I'm gonna do what I want to do and get done what I need to get done.
I don't know about
My
you
dad was a
guys, but
comedic
that's
genius.
definitely
He loved to make everyone laugh. He loved to be the
a little bit, just a little bit. But yeah, so life insurance proceeds, you know, they generally go to a lot, and which is why it's worth it. Not only dealing with emotional stress, but like I said, the financial stress, like strain that you go to after someone's death, especially if their income is a big part of the keeping the family together. So what does life insurance cover? Life insurance can help your loved ones cover expenses that they currently or will someday face if your earnings were no longer in the picture. So things such as immediate expenses, so that's funeral and burial costs, uncovered medical expenses, mortgage or rent, car loans, credit card debt, taxes, or estate settlement costs, ongoing expenses such as your food, housing, utilities, transportation, healthcare and insurance, and continuing a family or personal business, like I mentioned before. And your future expenses or your kids' future expenses, such as your college costs or retirement. So who needs life insurance? So whoever needs life insurance is someone who depends on you financially, so such as your parents, grandparents, partners, children, dependents, if you have someone who depends on you that way. Single parents, married couples, retirees, business owners, young professionals, people with unpaid debt or mortgages, and basically everyone, you know, like I know like at this age, we don't really like to think about, you know, life insurance just because it's an extra additional cost, right? And we already have so many things that we start paying for at this age. And you know what, you're like, oh, I don't have a kid right now. I have no one to pay for. I'm not married. I don't own a home. But you know what, you're going to eventually, right? And it's better to kind of prepare for it. What, like when, you know, like when you're younger, right? Before it's too late, because knock on wood, anything can happen. Life is not guaranteed. And even, you know, your family is, right, as they get older, anything can happen to them. And it's if your parents don't have life insurance right now, but they're, you know, taking care of you financially, without them, what's going to happen to you after, you know? So that's definitely something to consider about as well. And at the same time, life insurance is cheaper to get when you're younger, which I will get into a little later in this PowerPoint. So how does life insurance pay out? I know this was going to be a question later on. So when the insured person has life insurance and you are the beneficiary of the person that passed away. So once death of the insured occurs, you must file a claim. So all you need to know to start is the name of the insurance company and verify that you are the beneficiary. So you can get in contact with their agent, or if you don't know who their agent is, once you see their policy, it should have their policy number on it. You can contact the company and they'll help you with that. And you must provide a copy of the death certificate because they have to be, you know, dead to get the benefits, right? And payments could take as little to just a few days to a few weeks. And in terms of payout options, you can either get a lump sum. So that's the most common way of getting the proceeds for life insurance. So it pays out the whole death benefit at once. Or you can get an annuity payout, which a lot of people find easier and more, I guess, you know, it doesn't give them the urge to spend it all at once. So that's a series of steady payments that are made at equal intervals over time. So it can be weekly, monthly, or annually. So let's get into risks, guys. So like I said before, not everyone is eligible for life insurance. There are certain risk factors that underwriters do take in for you to be able to get life insurance, or else like it would be easy. Everyone would just get a cheap insurance. Everyone's paying, you know, I wish it could be that way, but unfortunately they do consider these factors. So the first most important factor is age. So your date of birth is a top factor affecting your life insurance premium. So there are a number of reasons why age factors into life insurance, and younger policyholders pay lower premiums. As you age, the likelihood an insurer will have to pay out on your policy increases, therefore your premium increases. So, when you're young, we don't really have a lot of health risks. We still have a long way to go, which is why it's cheaper to get life insurance when you're younger compared to when you're older and you're kind of closer to the end, to your expiry date, right? So 2, gender. So women tend to live longer than men. In the United States, the average life expectancy for a woman is 81 years old and 76 years old for men. The disparity means that women generally pay less for life insurance than men do. So ladies, if you do get life insurance, it'll be cheaper for you. The third factor they look at is your health history. So that's, your medical history, your height, weight, etc. Insurers may require a medical exam and access to your health records before issuing a policy. A history of medical conditions, especially serious illnesses such as heart disease or cancer, will increase your premiums. Insurers will also look at your weight, cholesterol levels, blood pressure, and other metrics that could indicate future medical condition. So that's definitely something that they consider. I know. Let's say, for example, as you age, you've had cancer, you beat it, right? Unfortunately, life insurance does look at that. That's why I said it's better to get earlier, just because once you've already gone like some sort of medical some medical issues, they look at that and they might exclude that with your policy, or they might just rate your premiums higher because you've already gone through something close to death, right? So that is a factor. And another factor is family health history. So even if you have no current medical conditions, a family history of illnesses, especially hereditary diseases, could factor into your life insurance and increase the premium and cost of that as well. So another factor is smoking. So the health risks associated with smoking, including potentially fatal diseases like cancer, means increased premiums. So if you've quit smoking since purchasing your life insurance, you should let your insurers know, because then your premium will lower down. So 6 is your hobbies. So, if you like to spend your weekend skydiving, I know I'm pretty adventurous. I love to do that stuff, but if you have high risk hobbies, it is a factor that they also look at in life insurance. So that was another thing in there that you might think of before adding into your application. And 7 is your occupation. So loggers, pilots, roofers are among the many professions considered higher risk than others. When you apply for life insurance, insurers will ask about your work. Your premiums could be higher if your occupation exposes you to toxic chemicals or requires you to perform dangerous activities. And lastly, the policy, which is the amount required. So that's, the specifics of the policy you choose is another factor that affects your life insurance premium. So policies issued for larger policies with smaller benefit amounts, that's something they consider as well. So like, for example, you acquiring for a $350,000 death benefit is going to be obviously more than someone who's going to be only acquiring for $100,000 death benefit. Also take into consideration whether you want term or permanent life insurance. So that's a factor for the premium as well. So as a young individual, would you guys ever consider buying insurance at this age? Just a general question. Yes. More times, 50-50. Awesome. Yeah, so like I said, not a lot of us know about it. Primerica got you. I know Primerica. So just like with our financial security, we never tend to think about life insurance until later on in life because we were never educated, nor was it something that we thought about to invest in financially at this age. However, the best time to purchase insurance, considering the factors mentioned prior, is now. So reasons to buy insurance young. So as a young adult, getting life insurance may not be the top of your priority list. Like I said, we have so many other things to worry about at this age, this time. After all, you're more likely to be healthy, not married, don't have children yet who depend on you. And with an entry-level job, you could be on a tight budget as well, right? So why pay unnecessary life insurance premiums at this point in your life? Here are a few reasons why you should consider buying life insurance. Yeah. So one, younger is cheaper. So death is the ultimate risk to the company, and by buying younger, there is a lower chance of you dying sooner and making a claim. Sudden or accidental deaths can also occur at any time, so it's good to have a financial backup. Guys, I have friends who died very young. I am 26 years old, and I have a lot of them who didn't even see that day, right? And because they didn't really know anything about it, them dying very young, like knock on wood, like I said, life is not guaranteed. Their families had to start a GoFundMe page just to afford their funeral, and sometimes they don't even get up to, you know, the amount of money that they wished for, right? And it's also if they have debts, or like let's say you know I have a car loan and I have a cosigner on that car loan, right? And I pass away before I finish paying off that car loan, that debt goes on to my friend, whoever my cosigner was, right? So having that insurance kind of like gives you the extra money to, you know, give your beneficiary, you know, some financial, like to not deal with financial stress, right? So it's definitely a good backup. As also, like I said, average funeral costs are about $5,000 to $10,000. Number two, healthy is cheaper. So when you're younger, you're more healthier and you're less likely to be declined, and you're less to no health risks developed. Chronic conditions like high blood pressure and cholesterol often begin to show up after age 30, guys. And you can have exclusions to certain conditions you've already had before if you acquire when you're older. Like I mentioned before, if you've had a certain chronic condition that you went through and you beat it, and you plan to get life insurance later on in life, companies do look at that and they might make that an exclusion in the case that something happens to you, right? So that's why I'm just letting you know it's better to get while you have nothing. You don't want to wait last minute in the case that anything happens to you. Number three, locking rates when you're young. Buying at a younger age locks in lower premiums and reduces the total amount you'll spend on life insurance in the course of your lifetime. And you pay for a certain amount of time and you're covered for the rest of your life with permanent life insurance policies. So with permanent life insurance, there are certain kinds of policies. There's a lot more flexibility in there in terms of, like, let's say you want to get a whole life insurance, so you're covered for the rest of your life. But then there's also the option to just which is a level, like paying a certain amount of time for your premium. So for me, I personally have life insurance. I got it when I was 19, 20, just because, you know, when I was younger, it's cheaper. I got whole life insurance and it's payable to 20 years. So when I got it at 20 years old, I'm only going to be paying the certain amount until I'm 40, but I'm covered for the rest of my life. I don't have to worry about making those additional payments because it's done. You know, I don't have to worry about paying something for the rest of my life, right? So there's a lot of other options when it comes to getting a certain type of insurance policy. And number four, protect your loved ones. Life insurance can protect your parents or loan co-signers, like I mentioned, from the burden of paying off your debt. If you're in a relationship and have a mortgage, life insurance can protect the surviving partner from having to cover the remaining amount themselves or losing the home entirely. And you can get cheap term insurance to cover the set length of time, your mortgage or business, if any, like I said, the loans, if anything happens to you. Number five, it helps you build credit. So you can build credit with, you can bank on with a permanent policy. And as your cash value grows, you'll be able to borrow against it. The younger you buy, the more time your policy will have to grow in value as well. And last, put protection in place of the future. So you may not have dependents now, but that could change in a few years. Investing now will put protection in place when your children, spouse, or aging parents rely on your income. And it can be more difficult or more expensive to get later on. As a majority of you guys being day traders, having insurance is ideal when it comes to managing your own financial security. A lot of people now prefer working for themselves, right, over working for a company. However, without the benefits that tend to come along with the employment contracts, like health insurance, disability insurance, and death in service benefit, it becomes completely down to you to prepare for any circumstances where you can no longer bring in your income. So as traders, we strive in working whenever and wherever we want. However, if something happens to you and you physically cannot do anything to generate your income, the question is whether or not you should invest in life insurance is an important one. So before I end things off, I just want to show a video for you guys because I love videos. Here you go.
I remember when my husband proposed. He said he'd always take care of me. Always. And he really held true to that promise. It's not just because he worked hard to provide for our family, but because of the little things. Things like these love notes he'd always hide around the house, or the way he made sure the kids actually did what they were told. Or just the way he made our home feel safe. So when he got sick, because he'd gotten life insurance, he was able to keep his promise. And even though he's no longer here, I know we'll be okay. He promised we would be.
Sorry if I keep putting you guys in your feels, huh? But that is all. Thank you guys for listening, hearing me out. I do want to hear your questions. I know a few of you guys have them, so we're open for that. And if you guys want to reach out to me personally, if you have any specific questions privately, or if you have, you're thinking of trying to get one for yourself or your family, definitely feel free to contact me. My phone number is there, but don't give me any crank calls, okay, guys?
All right, perfect. Thank you so much for that very, very informative presentation. Honestly, I didn't know anything about life insurance aside that if you passed away, it'd get paid out to your family members. And I didn't know how important it was and all the ins and outs, such as I actually thought it was all just for life. I didn't know that there's different term policies as well. And actually how to take advantage and get cheaper rates and cheaper options.
Yeah.
So I've been taking down the questions that have been coming in. I see we got another one right now. So I'm actually just going to ask that one because it's fresh in the chat. Question is, what kind of companies offer life insurance? Can you name any?
Okay, so there are many different kinds of life insurance companies. So there are two ways to get life insurance. You can either get it from the bank or you can get it directly from a financial advisor who is licensed with FISCO, which is the government who we have to get our license under. So with the banks, it's very limited in trying to in the different options that you can get life insurance. When you talk to a financial an insurance advisor, we are contracted with different companies, so we give you many more options, such as permanent insurance. Because I know with some banks, I was talking to someone else before, they said that they didn't give them the option of getting permanent life insurance. So there's insurance companies like Industrial Alliance, there's Sun Life, I'm affiliated with La Capitale Industrial Alliance. There's also, I think someone mentioned they were with Primerica, so Primerica has that as well. But there's many insurance companies that you can play around with and get a quote that will kind of best fit your needs. So when you do sit down and talk to a financial advisor, you kind of you have to talk to them, you have to do a financial assessment and see how much would be worth getting for yourself, and at the same time seeing what works best for you, either term or permanent insurance. But guys, there's also, I've only touched up on life insurance today. However, there are other kinds of insurance. So there's travel insurance, there's disability, critical illness, hospitalization benefits. Like there's so much more. But life insurance is just like kind of like a general in the case that you pass away, or the person who who you're reliable for their income for passes away, and they leave you with nothing.
Perfect. So one of the questions that came in right at the beginning was, what deaths aren't covered?
What deaths aren't covered? Okay. So like I mentioned during the presentation, so let's say, right, you had a chronic condition and you beat it, right? Like let's say I've had cancer before and I beat it, and then I apply for insurance. Because they know that they see my medical history and I've had, let's say, lung cancer before, they might exclude me for that, or they might give me a higher rating. Okay. And also there's a 2-year clause. So if you apply for life insurance today and you commit suicide within 2 years, they're not going to accept your claim, because there's actually fraudulent claims for that, where they just get life insurance, they kill themselves just to get money for their family. So there is a 2-year inclusion clause to life insurance.
Is that 2-year inclusion clause in every single policy, basically?
Every single policy, yeah. So if you acquire life insurance now and you commit suicide before the 2 years, then they're not going to take that into consideration, just because they think it might be fraudulent.
What if, so life insurance does life insurance cover suicides? Like if it is after that 2-year period?
If it's after 2 years, yeah.
I didn't know that one either. Find that really interesting. So some of these also might have been answered after they were asked. However, I still think it's good to recap once again.
Yeah, let me go through.
I have, how do you make sure that only your beneficiary gets the money and not their grandma, aunt, uncle, etc.?
Okay, so in the insurance policy, you will write down who your beneficiary is, but just to make sure, there's the option of checking off revocable or irrevocable. So irrevocable means that you can't mark them off. No one can mark them off except for the beneficiary themselves.
All right. And the third question from that series of questions at the beginning of the call that was dropped in the chat, which was answered as well, but great recap opportunity here is, can you get funds released to them in lump sums at different years of life? So for example, like their 16th birthday, their 18th birthday, 25-year birthday.
Yeah, I'm pretty sure you could do that. So with the annuity option, so you can it's usually like I mean, that's usually monthly, weekly, or yearly. If you want to do lump sums yearly, you can do that. I'm pretty sure it won't be an issue for, only have, let's say when you pass away, you give them a quarter, and then when they turn this age, you give them a quarter. But that's something that you're gonna have to kind of talk about with your insurance advisor, so they can do that for you.
Perfect. What is overall cheaper, term or lifelong insurance?
So I really
like a 30-year term and then another 30 years, for example, or to just take life insurance right off the bat, with how young we are?
So honestly, it really depends on like your age, your situation, like what you're planning to do financially with your life. So I would, if you're older, let's say in your 50s, 60s, I would suggest getting term insurance, just because of your age and your health risks. It's going to be more expensive when you're older. And at the same time, there's a less life, like your lifespan is going to be shorter when you're older than when you're younger, right? Like, so I would suggest that to people when they're at that age. However, if you're younger, I know a lot of us we're kind of on a budget when we're younger. We're just starting our jobs, but you guys are traders, you're good. But yeah, so when you're younger, I would say it's better to get permanent life insurance, just because there are options where it's covered for you're covered for the rest of your life, but you're only paying a certain amount of time. And even if you add it up, let's say you get life insurance when you're term insurance when you're younger, right? So let's say I'm only getting term 30. So I'm 26 right now. Well, I'm turning 26, but I'll only be covered for 30 years. So I'll be 56 by the time my life insurance expires for term, right? If I'm still living by the time I'm 56, I'm gonna have to renew that. And when they look at my age, when they look at me renewing it at that age, it's gonna be more expensive. So that's why I do suggest to people who are younger to just get a permanent life insurance, and especially because there's a savings component in that. So with the premiums, there's a cash value that accumulates. So in a few years, there's going to be a certain amount of money that you can take out in the case that you need, a loan, or you want to pay your premiums out. You can use the cash value that's growing in there.
And with all that, say you did get the lifelong insurance policy as opposed to term life insurance, because we are young, and so that's a great opportunity to save money right there. Is it kind of like, say, if you bought a car, for example, when you're financing a car or when you're paying cash for it outright, is it cheaper to pay with a single lump sum upfront overall in the long run, or is it best to do what you're doing, for example, where you you pay monthly for 20 years, and then at the age of 40, for example, you have no more payments for your lifelong premium?
Yeah, so it depends on what you get, right? Like for term insurance and permanent life insurance, you're paying until your death, unless you have the payable to like 20 years, payable to 30 years option. So you can definitely do the lump sum and only pay a little bit after. So that is a good option as well. It depends on your financial situation, right? But there's no interest. The premiums do stay leveled, so it's not like like that'd be a major factor as well.
Okay, very cool. Where is it? And the next question.
Does life insurance work the same for Canada?
Yeah,
I'm
see
not
how
quite
you're talking from Canada.
Yeah.
I think the better way to ask that question is, does life insurance work the same in Canada as elsewhere?
Yeah, so honestly, everything that I showed you guys is just based off Canada. I feel like in the States, it might be similar. I'm not sure how it works for other countries though, because I know some other countries don't even offer it. So I'm not quite sure for that one, but I'm pretty sure for the United States, it's pretty similar.
Yeah, I could see that it would be similar as well. Another one that I saw in the chat before
Yeah.
was, does life insurance cover you in case death occurs while traveling or you're not in your home country? Or does that fall under like travel insurance jurisdiction?
No, if you die in any way, like I said, without the inclusion clause, or if you're like traveling is definitely that they'll definitely cover you for that.
Okay.
But you can also get travel insurance. I think travel insurance, it's different. So you can also get a beneficiary payout to travel insurance in the case that you do pass away while you're traveling. So that's like an additional thing. But mostly travel insurance is used in the case of something happens to you, like you get injured or you get sick while you're outside of the country, you're in a different country, and they don't cover your health benefits or your payments, right?
Yeah, your expenses while you're away.
Yeah.
Okay. And another great question I actually didn't think of, but saw this and thought it was a good one to be asked is, can you get life insurance kind of like as a family bundle, or does everyone have to get it separately?
No, you can definitely get a family bundle. So like I have like my cousin, he has life insurance with me. It's I guess it's cheaper that way, but it's covered. He has one with his spouse, and then he also has his kids covered. But I would suggest, when they're older, and they can get their own income, to get their own insurance, because I believe once they hit a certain age, they should be getting their own. But that's only like in the case of something happens to them while they're kids.
Mm. Yeah, so it's like when you're still not of age of majority, then you
Yeah.
can, it's a good idea to have them covered under the family, for example, once they come 18, 20 years old. Then from
Exactly.
there, they are their own person.
Yeah, and you can also get a joint insurance with your spouse as well.
That's a good idea. Yeah, so that's all the questions that I saw in the chat and that I personally had as well. If there's any other questions, guys, please feel free to drop them now. Or as Deborah said, here's her information. You can definitely reach out to her with her information there.
Yeah, guys, for sure. I did leave my information there, so feel free to contact me. If you have any other questions and you can't reach me, you can contact Philip, and he'll get to me, right? I just want to thank everyone for your time, being here with us. Sorry, there was one more question. Let me just get through that. Can you change the beneficiary at any time? So if it's revocable, you can change at any time. You can just talk to your insurance advisor. If it's irrevocable, you can't change it. The beneficiary is the only person who has the right to change it. Again, thank you guys so much. If you do have any questions, feel free to reach out to me. I appreciate you all for being in this call.
Quickly, before everyone hops off, as Deborah said, there are other forms of insurance that we obviously did not go over in this call. So if you guys do have an interest in wanting to know more and having another call with Deborah and I, then we can set that up. If you want to know more about travel insurance as mentioned, as opposed to just life insurance, then please drop some ones in the chat so we know, and then we can start to set that up for another time. There we got 2 people, 3. Okay, there we go.
Awesome. Thank you guys so much.
So I hope you guys got a lot of value. I know I did. Took my notes. Have a great rest of the day. We got a couple calls coming up after this. So stay tuned in the announcements chat for those to be dropped, and enjoy your week.
Thank you guys. Take care.
Thank you, Deborah.